Good morning and welcome one and all to the AgYield War Room. It is Friday, June 21st. And if you don't know me, you haven't been watching. I'm AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. Very special episode of the War Room today, mostly because me and Ben are both wearing flamingos and we did not coordinate it whatsoever. So that's, I think, a first in the War Room. So I'm pretty excited about that. As always, feel free to join the discussion. Post a comment anywhere where comments are available on the platform you're watching. You can always reach us at info@agyield.com. From there, let's get the discussion going with the overnight markets. We'll kick it over to Ryland.
Yeah, thanks, Jack. We're a little bit higher overnight here. Looks like July corn up 3/4 cents. D's corn up 3/4 cents. July beans up 5 3/4. Nove beans up 1.5. Stock market's a little bit mixed right now. Looks like we got the Dow Industrial Average down 3. S&P is down 37. Nasdaq, as always, higher up 20 right now. So, little bit of greenery on the grain scenery. So happy to see it at this point.
Right on. Greenery and the grain scenery. That's an exercise right there. Anyway, let's jump over to Dustin, see where his thoughts are this morning.
Yeah, thanks, Jack. Yeah, obviously a couple of days of just real negative markets. That's kind of reflective of some of the forecast changes we've had over the last 2 to 3 days. So the European model continues to get just a little bit wetter in areas like Illinois that we're forecasting very hot and dry through that time frame. We still got a long way to go through the summer though, and we've pushed markets down what feels like kind of like more of a momentum technical pattern. It's still a pretty tight balance sheet, so it'll be interesting here. I think one thing that we continue to fight a little bit, we have the albatross, the weight in the market is some of the currency moves. When the real continues to fall like it has, that's actually a localized price increase for those producers. So, some of the things that we're noticing, like, spreads are staying narrow on this break. Like July 25 is actually fallen faster than D's 25 for a lot of this break. So why is that? It could be that the market's perception of the next crop year out of South America is more lucrative to sell for them, and that's partly why we'd see the tightening despite the flat price sell-off, when usually those two things are positively correlated. So we'll just have to see how we finish up this week, see where managed money is as of Tuesday. Unfortunately, it's always a delay when we get these reports on the Friday afternoons. But by all accounts, it does look like funds have resumed selling just based on price action. And for them to get out, they would probably need some sort of a catalyst to force them out. And so far, we haven't had that.
Yeah, very interesting points. Anything to add there, or should I kick it over to Ben?
Yeah, I'd add to that too. I mean, we talked about this yesterday, just the chart formations as well and technical selling. And, beans just made a new contract low yesterday. Corn's, within 15 cents of making contract lows. So, until they take, whoever they is, but, managed money or, professional traders, hedge funds, they're making money being short, so until that stops, they'll continue to do it. Farmers obviously have been continuing to sell going into first notice day. You're kind of surprised every year when you find out how many farmers kind of have old crop supplies and have to price it within a very short window. And we've probably over talked about this for weeks now, but all that's kind of coming to a head. And then you add in some little wetter pattern, and it's not looking so good for everything right now. I would also say that this is the first kind of bad corn export number we've had in quite some time. We've been consistently kind of above the estimates, and today's number was pretty small. So you'd like to keep seeing demand on these breaks. So this is the very first sign of any kind of weakness in the corn export number.
Thanks for that, Justin. Ben, what is on your mind as we wrap up the week and call it a week?
Yep, Jack, I'd just like to say that's a really nice shirt. I think that this is a little bit ad nauseum, but the mechanical nature of options expiration, um, coupled with a lot of things after that, right? We've got first placement day, first notice day, and then the big report that comes out a week from today. So the market's not, technically it doesn't look great. We discussed yesterday below 460, 459. We saw some follow on selling. Going into a weekend, I think that we've seen a lot of different shifts in weather patterns. You have to have some humility with these markets on what can happen in both directions, I think, over the next few days. And then once we get all of that behind us, it will purely be July and August weather. And the market's going to do what it's going to do. It's going to, in a volatile market, it will bring people in too far in both directions. And I think that maybe we're a place where we're sitting at least in corn.
That's great stuff. Ryland, I'll kick it over to you to talk a little bit about livestock this week.
Yeah, well, it's kind of an interesting trade. It's been a little bit on the mixed side here. We had a wide range of trade as far as the cattle goes. It seemed like we rallied kind of early or fell back and then kind of came back. So just all over the place yesterday. I think there's a lot of anticipation for this report right now just because there is still a wide deviation of expectations for placements. So we'll see what that says. And there really hasn't been any cash trade to speak of right now, but the beef has really been leading the charge. I think everybody got a little bit excited about beef market topping a little bit too soon. Just consider beef 90s are still just rocking and rolling, just new highs here. We got choice beef, new highs. So it just kind of feels like we really haven't slowed down the big seasonal push yet. So we're sitting at a price level, some of the highest level we've seen in 6 months. So overall, it's a really good kind of hedging opportunity, especially just in case you run into a bearish report. But right now, there just hasn't been a big slowdown in cash. You got the big prices in the north and just kind of creeping higher in the south. So at some point, it looks like it's probably going to come to a head, but there's been a lot of comparisons to last year's price action on the cash side of things, whereas we kind of just drifted sideways and just dealt with the high price through the rest of the year, even as beef markets kind of topped. So I think everybody would like a repeat of that, but overall, just seems like we're being a little bit cautious on the cattle side. As the hogs go, they kind of failed their little 2-day rally. It looks like it was a little bit of a recovery, but we have seen a little bit better of a fundamental kind of trade, just with bellies being up $10. Seeing the cutouts still relatively firm here, but cash just seems to be languishing, and the premium on the board is just something the market's going to have to deal with. So selling resumed, and we're just sitting right near contract lows as far as hogs go. So at this point, it's always it always looks like it's an easy place to pick a bottom, and then you get surprised. So overall, just there hasn't been much good news here for quite some time, and I think just we need to see cash prices go higher, or at least in the short term, just to get the market out of its funk and to kind of stop it from making new lows. So that's what I'm looking at, Jack.
Excellent. Thanks for that, Ryland. Always appreciate the livestock updates. It is Friday, which means it is the best time of the week. It is finally that time. It is Fun Fact Friday with Mr. Brian Williams.
Oh, thanks, Jack. Appreciate it. Happy Friday, everybody. Tonight we will be experiencing a full moon. It is called the strawberry moon. It usually marks the start of summer. Native Americans in the Northeast, especially the Algonquin tribe, mark this as the time to gather the wild berries, hence strawberry moon. The thing that's so unusual about this one is happening so close to the summer solstice, which happened yesterday. So that was like the last time that happened was about 20 years ago. So just kind of give you an idea on prices in the grains. Dees corn on June 21st, 2004 was $282.25. And no beans were $679. So quite a disparity even today with the weakness we've had this week. So Ryland, this would probably be a good time for, get the family together for like a moonlight picnic with a bonfire and just glow in the bask of the strawberry moon.
All right. Well, I think I'm going to. Well, where's your strawberry shirt?
Yeah,
come on.
I had pineapples, but I didn't think that was appropriate.
Yeah, good.
Oh my God, that's lovely. I look forward to the strawberry moon.
All right.
I think that's going to do it for us today, guys. As always, we are streaming live on X, Facebook Live, YouTube Live. I appreciate everyone's points today, talking points. We appreciate all of you for tuning in every week. We will be back, of course, next week, Monday morning, 8:15 Central Time, with your second favorite host, Dan. Thanks, everyone. Have a great weekend, and we'll talk to you real soon.
Thanks,
Jack.
Thanks, guys.